In his role as CEO of Greenlane Holdings, Nick ensures the company executes on its missions of elevating all elements of the consumption experience. Prior to Greenlane, Nick was the co-founder and CEO and chairman of the publicly traded KushCo Holdings, another industry pioneer, which merged with Greenlane in September of 2021. Under Nick's leadership, KushCo grew from under $2 million in annual revenue to achieving nearly $115 million in fiscal 2020, with operations in multiple states and countries and employing over 100 team members. Nick graduated summa cum laude from Southwest Baptist University, where he was also the captain of the men's NCAA basketball team. I am so envious. I haven't been able to play basketball for the last 4 days. But the Celtics won last night. After college, Nick became an entrepreneur, starting and building several successful businesses, including Big Rents, a leading online equipment rental company, and Alpha West, a diversified holding company whose portfolio business generated a combined $100 million in annual revenue. And our interviewer today, an old friend, speaking today with Nick is CNBC's Tim Seymour. Tim's co-host of CNBC's Fast Money and is portfolio manager of CNBS Cannabis ETF. He's the founder and chief investment officer of Seymour Asset Management, or SAM. SAM provides both asset management and wealth management services for its clients, including direct investment and allocation to provide equity and alternate assets. Tim is also the portfolio manager of Amplify Seymour Cannabis ETF ticker, which you can find on $CNBC. This is going to be an important, they're going to talk about the success of a company and how it's done. So for those of you who are looking to get in or are already trying to grow, these are the guys to listen to. Gentlemen, it's all yours.
Thank you, Carl. First of all, congratulations to CWCB for putting together yet another event that I think is representative of not only the industry from the business perspective in a macro sense, but truly one that represents the people, and I think the grassroots, pun intended, element of cannabis industry for New York City and for New York State, and it's an honor to be here to have this conversation. It's really tough to come on after Redman and be sandwiched between Redman and the mayor, but we're going to try to keep you updated, but more importantly, have a conversation about. I'd like to frame the context of the conversation we want to have today, because again, I think we're going to talk about Nick's background and Greenlane and how he's uniquely positioned to have a conversation about not only the industry itself, but the ancillary industries that support this industry and consumer products and things that many people out there today are fascinated by. Quickly, Carl did a great job with bios. What I want to say about my background in cannabis from my CNBC perch, as someone that shows up every night at 5 p.m. on a show called Fast Money, which is, if you're not a finance geek or someone that cares about markets that much, we're kind of like the Sports Center of markets. The day's over. At 5 p.m. we get on and we talk about what happened in things that you may care about or you might not care about. And by design, we're a mile wide and an inch deep. And I've been doing that for 15 years, and I'm someone that's been investing in emerging markets and new asset classes. I lived on the other side of the world and have invested in those economies. But when cannabis started taking shape as an investable consumer product class a long time ago, I was fascinated by it, and to the extent that what we see in cannabis and the growth of this industry. It's no different than any other subsector that develops alongside of very sophisticated industries. This is a consumer product. This is what people refer to as CPG, consumer packaged goods. And with that, this industry will be as sophisticated or more so, and will be moving quickly and leapfrogging so many other industries, at least, or joining them at a time when technology and logistics and ERP and all the things that make Amazon who they are. This stuff's going on in cannabis, and we're going to have this conversation with Nick today. And just quickly and simply on, the sense of talking about cannabis on a financial TV show to a national audience, and the responsibility that I feel like I've had from the early days when I first brought it up. To me, when I went to my producer and said, hey, look, I'm investing in cannabis, I'm involved in the space, I think for our audience who care about Kleenex and Clorox and Kraft and Beyond Meat and other consumer products, or Budweiser, they're going to care about this. They're going to care about investing alongside of it, whether they're a consumer or not. He said, fine, let's do a segment. And the first time we went out there to do a segment, it was probably late 2017 when cannabis was about to legalize in Canada in the following fall. But there was so much momentum, and California's adult market was kicking and getting into gear. Went on there, started talking about it, and as I'm talking, my producer smirking in the background, I can hear him in my ear. He's running like B-roll from Cheech and Chong movies and bong water sound effects. And the point here is that while I was like, all right, and I grew up in a big family, and I've been doing this for a while. It's like, you never let them see you sweat. But it was important for me to stay in the pocket and just kind of say, hey, look, joke if you want, but this is 2017. This is a $20 billion industry now. It's going to be a $100 billion industry in 5 years, and here we are. So that's the story I've been trying to tell about cannabis, is not as a cheerleader for a particular company or not, but to talk about investing in a sector that I think is well overdue. The social issues and the criminal justice reform issues around this industry are ones that I think people often pick up later. And I think, again, the responsibility to telling the full story is part of what we want to do. But we're here to talk to Nick today. And so, Nick, I want to first, why don't you just quickly introduce yourself, give your background and how you got into cannabis. And then I want to frame a little bit about what Greenlane does, because, again, I think you are someone that can give insight into how brands are built here. You're in touch with the biggest players in the industry. You're in touch with some of the smaller fledgling brands, and I think that would be very helpful to the audience.
Yeah, thanks, Tim, and hi everyone. Thanks for joining. Appreciate the opportunity from the team here at CWCBE. Gretchen for having us on here. Carl for the introduction, and Tim, as you mentioned, like the role that you play in the industry, right? It's like I've been there, right? We've helped sort of bring this into the capital markets, and you've played a phenomenal role in doing that. And I think going back to the beginning, I was just an entrepreneur, young kid out of college, wanted to go into an industry that, we had an opportunity to knock on doors no one else was knocking on. And if you're brand new, it's much easier to do something where there's not a lot of competition than to go into an industry where there's 30, 40, 50 years experience and you're the new kid that nobody knows, right? So we saw an opportunity there, and just we're trying to build a business, and realized along the way how important.
What year is this?
This is 2010.
Okay.
2012. Colorado went legal 2014, right? And things started really taking off, and then you realize how important capital markets are. And I remember the first conference here at the Javits Center, the CWCBE, and just recognizing that we need this for the industry to work, right? And so we're here in New York now, even more years later, it's finally legal, and that's really going to change things. And so I think kind of what to talk about today is being an entrepreneur in this industry, where the opportunities are. I understand I have a great lens, as you mentioned, with what Greenlane does, and we'll talk about that, but also how big the regulatory aspect and the capital market aspects are to ensuring that businesses can actually survive and thrive. It's an ecosystem that all needs to work together.
It does, and we're going to talk a little bit about maybe Nick's observations of New York and New York's regulatory environment, and the fertile ground that is New York City, and the very mature, California. Nick's from California, and California rightly takes its place as really probably the most sophisticated, largest cannabis market in the world. But as New Yorkers, we all, and let's go Mets here, by the way. As New Yorkers, I think we are entitled to feel like brands and style is built in New York, and I Nick knows that too, and I think that's part of assessing Nick's observations on the New York marketplace, I think, are going to be really interesting to you. Quickly, Greenlane, help us, for people that don't know who you are and what this company does, and I'll just, this is a note from, there's a big cannabis conference that was going on in New York yesterday. Jefferies, you may know, it's an investment bank. It's one of the top investment banks. They have a major commitment to the cannabis. Their analyst, Owen Bennett, in his note on Greenlane, it's a research note. It's a very sophisticated. It's Wall Street research. It's it's the kind of stuff that goes on for sophisticated consumer companies. He in the bio in the opening of the article where he gives his recommendation, and he's got a buy recommendation on the company. He says Greenlane plays, quote, a critical role within the cannabis ecosystem, and it makes it uniquely positioned to participate in the industry growth. So what does that mean, Nick? Because you're not growing. You're not outright selling the product, but in some sense, you're touching almost every aspect in between.
Yeah, exactly. And we've long been the picks and shovel player in the industry, right? And we know the stories of the gold rush and miners that got rich, some didn't, but there was a lot of shovels sold, right? There's a lot of jeans sold, right? And that was always our thesis, and we've developed this position in the ecosystem that's really extremely important. So you have operators, especially now, supply chains are really hard to manage. Getting goods from overseas, from China, with all the stuff that's happened with COVID and the regulations, the tariffs, all of that has been a challenge. And we've been a supply chain partner to, fortunately, a lot of the largest companies in the industry who need to make sure they have their packaging, their child-resistant jars, their tubes, their boxes. They need their vape cartridges. C-Cell is a lanyard sponsor here at the show. We're a partner of theirs, distributing the C-Cell products, which are the best cartridges in the market. The biggest, largest e-cigarette factory in the world. S'more is the parent company. They're publicly traded. And these are the types of products that we bring to our enterprise clients, which can be everybody from the smaller brands that are just getting started in building to the largest multi-state operators in the industry. And this is new Greenlane is a combination of KushCo, a company I co-founded in 2010, and Greenlane, who's even an earlier pioneer. And together, we're offering the packaging, we're offering the cartridges, we're offering butane and ethanol. All of that's upstream with the operators. And we also have consumer products that we're offering downstream. And so everybody, whether you buy your cannabis legally in a regulated market or in the illicit market, you want to create the best consumption experience. High-end, bongs and pipes, vaporizers, dry air vaporizers, the Volcano device. These are all products we sell. And then we own our own brands like Vibes rolling papers, Ice silicone. If you go into a bodega, you'll see the little Ice silicone spoon pipes. That's our brand. And so we want to, our mission is to elevate the consumption experience. And we want to do that in all those different channels. And
you're clearly seeing both brands in terms of flower and the product or the different form factors. Then you're also seeing those picks and shovels companies that are there to support. Is there a certain side of this business that Greenlane is more drawn to at this point? Certainly, KushCo in your earlier stages before you merged with Greenlane, packaging and some of the butane and the gases and some of the dynamics around that were the big part. What part of what Greenlane does now as this combined entity do you see the most opportunity in running this company?
Look, I think it's in the brands, and everybody's competing. We talked about New York being a market that's where phenomenal brands are going to be built, right? And most people are doing that with cannabis brands. But, Apple sells a lot of iPhones. They also sell a lot of accessories, right? And there's less competition, less players focused on ancillary brands. So our brands are products that help you consume cannabis. They're brands that consumers will identify with, recognize, and create, joy for themselves in the experience of cannabis. And the advantage is we can sell these products everywhere. So in a regulated cannabis market, you can only sell cannabis in that market. You have to get licenses in multiple states or jurisdictions to expand. You can't ship products across state lines. The advantage we have is our products are considered more normal, right? And we can ship these products around the world, so we can sell and build our brands in Europe, in Latin America. And we know eventually there's going to be a regulated cannabis market, but that could take 5 years, 10 years. We're going to get a head start. And so whether people right now are buying from a street dealer, they're using our products to consume it. Eventually they'll be buying in a legal retail store and still be using our products, hopefully, to consume cannabis.
Explain the relationship you have with the legal retail stores. And as we know, within the industry so far, state by state, it's very different. New York right now is rec has been passed. Rec retail is not in place yet. There is medical retail. But explain the relationship that Greenlane would have with either legacy retail outlets like the 10 ROs that exist in New York State, or pick a state, pick California, pick any state where some of the major operators, and clearly the way the industry has evolved so far is that the largest players are the ones that largely have also, they're vertically integrated. So they tend to grow, they tend to process, and then they tend to retail. And in fact, unlike New York City, where a city block has retailers that are thankfully, and we're losing them, and we got to fight for this every single day. But mom and pop retail is something that's an endangered species. But in cannabis, maybe to its detriment, but maybe because of how it's had to evolve, the largest players own most of the retail. So explain the relationship you have with those companies, how your brands, how third-party brands get on those shelves, and it's clearly complementary, but also that you're in C-stores. I mean, and so whether it's 7-Eleven or whether it's other convenience stores, there's different ways. And again, by being picks and shovels, you're kind of uniquely positioned in both markets.
Yeah, exactly. And look, we have a great relationship with a lot of those vertically integrated MSOs because we sell packaging and C-sell products. But those same MSOs, like you mentioned, own a bunch of retail stores, some of them over 100 retail stores. So it's a perfect opportunity to leverage our relationship to get our branded consumer products into those stores. And I think what you're going to see is a migration and a shift, whereas consumers today are used to, hey, I want to buy a pipe, or I want to buy a bong or a vaporizer. I'm going to a smoke shop or a head shop, or maybe I'm going online to a specialty site. In the future, why not buy some of those products right where you're buying your cannabis? You go into a dispensary or a retail store to buy your cannabis. Well, they should offer papers, they should offer batteries, they should offer vaporizers, they should offer glassware and things like that, so you don't have to make 2 stops. And you're going to see that play out as more stores get rolled out and as competition increases.
Let me ask a dumb question. Why isn't that stuff there now? Doesn't seem like this is that innovative of a development.
Look, because it's focused, right? This industry is brand new. Everybody, if you open up in New Jersey, your biggest concern right now is how do I have enough cannabis, right? It's not sales, it's not margin, it's just can I get enough supply? So that's your focus. Now, as the industry matures, more and more competition, the margins on cannabis aren't going to be as good. We're seeing that in Canada. And so how do you offset that? Selling papers, selling lighters, selling grinders, selling some of these ancillary items. Retailers are going to get what we call keystone margin, which is basically a double up. And so if you buy a grinder from Greenlane for $2 and you sell it in your store for $4 or $5, that's going to be, in the future, significantly better margin for the retailer than cannabis. But right now, cannabis margins are good in New Jersey and some of these newer states. It's just they haven't got there yet, but it's all going to happen very quickly. Greenlane's in a great position to capitalize, and that's why it's a core part of our future growth strategy.
And everything you're saying explains the evolution and the sophistication of an industry. What you're talking about in terms of ancillary products in cannabis and the margin potential there. In other words, the profitability on a retail level. This is exactly what goes on in other industries and other consumer products.
Yeah, and you and I have talked about how cannabis is going to be more and more normalized, but in reality, it's very tough right now. Like the regulations and the way things are set up, companies are not making money. I was talking to a lot of the operators that were at the Jefferies conference that we were at, and folks in California, for example, I'm talking to companies that are $200 million in revenue, and targeting break even. You would think any other industry, 200 million in revenue, you're pumping out 20 million of cash flow every year at least. That's not the case. One of the main reasons is they estimate $15 million a year in additional expense because of 280E taxation. So that needs to get fixed. A lot of these markets aren't going to work until they fix the regulatory at the federal level, and that's where these retailers need every ounce of help they can get. The ancillary products can play a small role to try to get the profits that can sustain until some of the regulatory stuff improves and we have a market that works where businesses can thrive.
Yeah, and a little insight, and many of you probably know this, but many I bet don't. 280E is a IRS tax designation that basically is for an industry that is outside of federal guidelines. Cannabis is a Schedule I drug. The absurdity of that is something we could spend hours on, although it's one or two sentences. But the point, because it is a Schedule I drug, retailers and people that are doing very traditional things are not able to subtract their cost of goods sold. It makes cannabis companies inherently unprofitable. It makes it almost impossible for the industry to conduct itself in a normal way, leaving aside the fact that there are major banking restrictions and bags of cash and the things that are obviously very unsafe. But 280E is something you may hear more about, and that's what this refers to. And if one of the big victories that could happen in maybe 2022, I don't think you're going to get full federal cannabis reform in this country, and there may be some changes in the Senate and the legislative center of our country. And by the way, I believe cannabis is a bipartisan issue, even though there are traditional blue-red lines of designation, the aisles. You're blue, you're red. Sorry, everybody over here. Just kidding. It's in New York. That joke gets some laughs. It might not get a laugh in Texas. But you have a case here where 280E, and back to what Nick's talking about, for people that are doing business means they have to go to other places to make their money. And this is actually highly profitable, high margin business.
Yeah, and I think we have to be creative. And, we heard a panel yesterday talking about brand building, and Berner was on there, and he was talking about how he's shadow banned on Instagram. And how do you engage with your consumer when you can't use the traditional channels that most brands are used to using? You see a lot of cannabis billboards. Why? Because, again, the things that companies have moved on from billboards, but they're using tools that, Google search, paid ads, Facebook, all this stuff. They won't do cannabis. So you're going back to billboards, you're going back to print ads, but you've got to be creative and figure out a way to build your brand. It's not easy, but the reward is so big. $100 billion. I mean, that's what's happening today. A lot of it's still in the illicit, but it's $100 billion. That's just in the U.S.
Well, and I can tell you from my investors chair that the companies that are either traditional picks and shovels, but ancillary industries, whether in cannabis there's some, obvious, one brain cell connections. You have specialty retailers. In other words, folks that specialize in ag products and fertilizers and lights and hardware and things that help you grow cannabis. Investors in the investment community are looking for ways to have exposure to this industry that is a $100 billion industry now. I don't care what anybody says. You throw in the illicit market, this is a $100 billion industry. Beer, wine, and spirits, folks, are $120 billion. Beer, wine, and spirits. Think about how many ads you're sitting around watching a ball game or anything on TV, and think of how many ads you're being bombarded with from those industries. I mean, this industry's already there. This is a global industry. This is, the dynamics here. So Nick, help us understand, and there may be some entrepreneurs in the crowd that have products that fall into your purview. I guess, first of all of these ancillary but accessories. Let's call them accessories. When I was growing up, we called this paraphernalia.
We don't say the P word.
The P word.
We don't say the P word.
You know, the P word is like the M word. Like I haven't used the term marijuana in a long time. I mean, so and on CNBC, if you hear me use the term marijuana, call the network, ask for me to be kicked off air, because it's a term that's I think is derogatory, and I think it's rooted in a lot of things that so paraphernalia is derogatory too. In the accessories world, Nick, what do you see in terms of segments that are most interesting to you? Either as a company that wants, you have your own brands, it's a higher margin business, or the brands that are selling. And there's some obvious stuff in vape land and papers and water pipes. What? Give us a review.
Yeah, I mean, look, I think it's a wonderful world we live in today because we have legal cannabis, and that's driving innovation. And just in the terms of consumption, the vape cartridge is a great example. Didn't come around until 2014. We're selling, 40 million cartridges a year. It's an insane amount. There's
sorry to cut you off. We've all heard about vaping. We've all heard about all the things that have been going on in terms of the headlines, and a lot of this, by the way, is total conflating stuff that's going on in nicotine and
Correct.
Things that are just we don't want our youth vaping, and I don't think we should. And but what's going on with vaping? I mean, is that fallen off as a category? Clearly. Flower and just smoking cannabis traditionally still is the most popular, especially by people that are the biggest consumers of it.
Yeah, but look, it's losing share, right? And vape is now back above pre-vape crisis levels, which was in September of 2019. 30% of the market in California is vape now. And so why is that? Because it's so easy, it's so convenient, and people that normally maybe wouldn't have consumed cannabis and dealt with rolling their own joint and grinding the flower, they're like, okay, I like the vape pen because I can grab it, it's on the go, I know how to use it. They're comfortable with it. And that's just one of many things that we saw. Concentrates, that was an area that was very unapproachable as well. You have to get the dab rig and the torch, and then the Puffco Peak came out, right? And it just made it much easier and made it accessible to the regular consumer. We see concentrates as a category growing tremendously. So what's next, right? There's going to be more and more innovation in terms of how you consume cannabis. People want to do it on the go. There's going to be tech-enabled devices, right? We're going to see all of that come into the market. And you'll see continued proliferation of SKUs. I mean, I know that flower is still the dominant one, but it's less than 50% in some markets. And pre-rolls is growing. Pre-rolled cannabis, 97% of cigarettes are pre-rolled. People don't roll their own much, so you expect that trend to continue in cannabis. So you got to kind of look to the future and then look at, where these products can be sold.
Like, by the way, I mean, if you can roll a really sweet joint, I mean, that's something you show off at a party.
You can hang out with me. Yeah, I'd love to be your friend.
I mean, who in this room hasn't either shown off or said that person is cool?
You see that? I can't roll, Tim. That's my one downfall.
Look, man. I mean, you have an embarrassment of riches, Nick. So we'll leave it right there. So let's get into a little bit. We're talking about distribution. We're talking about retail. Let's get into some of the biggest companies in the world and the role you think they may play in cannabis. And I'm talking about Amazon and I'm talking about Walmart. And Amazon has been out there already making a few statements in terms of look, they recognize what's going on, and they actually have been very pro cannabis in a number of ways. They've been communicating this. So talk about just distribution. And again, this is why cannabis is going to continue to be very investable, very much a sophisticated consumer packaged good, because it's going to exist in the same marketplaces and in the same distribution channels with the same shipping at some point. And I realize this is state by state, and I may be speaking of an industry that's 10 years in the future. It'll probably be faster, but again, if you ask Nick and I where this industry is now, even from the legislative path, and if you told me today the conversations that we would have had, that we would have passed safe banking in Washington 5 times, even in the House, I would have said no way.
Yeah.
So
no, I know it's frustrating that we haven't got where we need to go, but it's encouraging to see all the momentum. I mean, the House voting on full legalization on the MORE Act, passing it, the Senate passing a research bill recently, and all of this talk, New York being legal. I mean, this stuff is incredible. It takes a lot of this to normalize cannabis. You getting on CNBC and talking about it, companies like Greenlane doing IPOs on NASDAQ, all of this. Kevin Durant came out, and said, yeah, he uses cannabis. All of this stuff is helping normalize and move it forward, and it's bringing in businesses like Amazon that are, hey, why continue? This is normal. We're not testing for cannabis anymore at Amazon, right? That's great. Now you're expanding if people think it's acceptable, I'm not going to get fired from my job, then you're going to get more trial and more adoption. And so this industry is only going to grow and grow and grow. And you've got to think about where those opportunities are going to be in the future. For us, for example, we historically did a lot of distribution at Greenlane. But we know that smoke shops and head shops are great channels today and will still be for quite some time. But eventually people are going to buy all these products on Amazon too. And I buy a lot of stuff on Amazon, right? I'm sure you do as well. And so now this is a whole new marketplace, and we got to think as a company, how do we not, first of all, how does that not become competition and hurt our business? But more importantly, how can we use that platform, Amazon specifically, or Walmart or eBay or these other platforms, to amplify our business? How can we turn that from a threat into an opportunity? And I think everybody that's getting into cannabis as an entrepreneur needs to sort of look forward and think about how the regulatory environment's going to evolve, how that's going to impact your business, what happens when this becomes fully federally legal, what happens when there's interstate commerce. And although that may be a ways away and not affecting your business today, you should have a strategy in terms of how you're going to position yourselves to take advantage of that in the future when that happens and when this evolution continues to move forward.
Yeah, and I think that there's not a Fortune 500 company out there that doesn't have some kind of a cannabis strategy. And they absolutely do. And the dynamics around some of the change, and look, there are truths to the rumors about certain industry groups that are obviously pushing back on cannabis. It makes sense that Big Pharma has been pushing back, and Big Pharma, especially in a forum like this, is easy to vilify. And they also did us a solid in COVID with some pretty amazing work. So, I mean, I think there are places to look at some of the evolution of where cannabis is still getting pushback. But to the extent that this is the recognition from financial services, from the insurance industries, from the distribution, from all of these natural partners to cannabis, you can bet that that's what's going on. And I think, unfortunately, again, look to booze, interstate commerce on cannabis. If you talk to cannabis producers in California, they're going to tell you we grow the best weed. California weed is going to be shipped to New York. It's just a matter of time.
It already is.
It's everywhere.
I mean, and let's talk about that because I think it's important. We've been talking about the New York market, and I think, being in this industry since 2009, 2010 in California, and seeing what's happened there in the evolution and how that's created a really challenging legal marketplace. And I think there's concerns that I see similar things happening in New York, right, where all this cannabis is now available. And really, there's companies able to sell up and down the streets, and there's no enforcement of that, and it's really challenging because I would totally agree that no one should go to prison for cannabis, right? And I think it's going to be hard to find prosecutors that want to prosecute, juries that want to, put people away for cannabis, right? It's crazy. But at the same time, if you create this illicit market, you're going to end up in a lot of the similar situation that California's in.
Well, so I've been in the restaurant bar business at different times in my life. I own a bar in the West Village. If anybody wants to go to 558 Hudson Street, WXOU Radio Bar, it's a great little tavern. But if I opened up a bar in New York City without a liquor license, I'd be closed down so fast. And rightly or wrongly, liquor at least is accepted in this country as no big deal. So the dynamics around licensing, and it's why New York, has to get this right, and why I know the OCM and New York City, and they're spending so much time trying to balance the social equity issues with the the commercial issues. And again, I applaud New York, and like everything else that people would expect that in New York, it's so big, it's so complex. This is going to be the toughest place, I think, to make it work right. And that worries me. Also, it excites me as a New Yorker who has multiple places where I do and hope to engage in this industry. But your observations as a Californian in the industry, where California, again, is the epicenter of some of the greatest product in the world. Some of the best brands and most recognized brands in cannabis are California brands. And what percentage of California cannabis businesses make money, do you think, are profitable?
Yeah, very, very, very few, right? And I mean, there are individual dispensaries, but like larger companies that are trying to grow and scale, it's hard to make money. We talked about 280E, but a lot of it is also the challenges with the illicit market and the ability for them to undercut. Governor Newsom, who I'm close with, just stepped up and eliminated the cultivation tax and reduced the excise tax to help facilitate a better environment for the legal operators to compete. But if you look at alcohol, booze, right, it would be really hard for a illicit operator to compete with established big liquor today, right? Their supply chains are so robust. Their costs have come way down, right? So they're producing stuff way cheaper than somebody in their garage could produce, right? And that didn't happen overnight. So, but now you can tax it, and they can afford the tax, and still the illicit market can't compete. But again, we've got to get there. So I think in this early stage, we really need, and we're not getting the support from the federal government, so we're going to need the states to think about how do we make this environment to where the legal businesses can actually compete, can actually invest in their operation and their production, their scale, and get their costs down so that forever they can, be a more efficient provider of cannabis than anyone off this, that's growing illegally, right? And I think it's going to take time, but we have to have that in mind of where the goal is. The goal is not to maximize tax today. It's to build a real industry, take out the illicit industry that's not providing any tax, and then all of the money that will come in, that and more than what you originally thought. So again, it's not easy, and I too commend New York for a lot of what they built with the program. But this is a very critical time, these next 12 months, to getting this right, getting it rolled out, and not letting the illicit market build to a point like it has in California, where it's impossible to shut down, and you're going to need to let the legal businesses do it through the market and build their brands and get their costs down to really compete. But it's going to be years in California before we see even a majority of the sales happening in the legal channel versus the illegal channel.
And I think New York is eyes wide open. And again, New York's New York, so we're going to do this how we want. But our leaders in the OCM and the folks that are dictating policy have watched this. By the way, on taxation, this is like economics 101, but the right taxation is the tax that draws people into the economy, right? It gets people to want to pay their taxes and their fair share. People want to pay their taxes if they're fair. And the federal government right now is focused on an excise tax. I'm sure they are. They want their fair share. Treasury has spoken about this. If you listen to Janet Yellen, who runs the Treasury, she's out there talking about cannabis and that to the Supreme Court, we can't be half pregnant on this issue. So it's a crazy, crazy dichotomy. About a year ago, I wrote maybe it was 2 years ago, I wrote an op-ed for CNBC where I talked about New York, and I talked about the market that I think, by the way, this wasn't necessarily my idea. It's me being part of communities that have had these conversations. What's happened with the hemp growers in New York in the last 6 months is something that's great news. It's great news because it's great for a hemp industry, but I don't think this was done for the hemp industry. This was done for the social equity community, to be able to have product ready to be sold and basically to have control over that process. Because you can't stand up up a retail dispensary with a social equity applicant if they don't have product? And so again, it's the complexity of the commercial side of the balance of the equation that I think New York is dealing with. And all I can say is, yes, I as a New Yorker and as someone that recognizes and has participated and certainly been a consumer of the legacy market in New York, look, that market's important, and that those people need to be addressed. But there is a process, and there's a process that I think needs to bring everybody under that tent where people can come forward and say, I want to run this business the right way.
Yeah, that's the thing, right? If you're looking at this industry right now in New York and the fight that it's going to take to get a license and all the costs versus the money that's being made today, and what's going to draw you in, to your point, right? We need to set up a framework that gets people motivated to come in and gets consumers motivated to purchase through the legal routes.
So at some point, we should appropriately be kicked off this stage by the mayor, and I believe that's sometime soon. In the meantime, I don't know if there are questions. Otherwise, we've got a lot we can talk about, sure, and I don't know if there's a mic. Otherwise, and here comes Carl heading over with a mic. So we're happy to answer some questions, and then we can get back into the rest of the conversation.
Thank you. Hey, Nick, so how do you feel about some of the legacy distributors in the country once they start carrying more and more of the products that you're kind of distributing in these states that are large cannabis states? But does that become a threat? Does that mean your focus switching more and more as far as a proprietary mix versus carrying some of these ancillary brands that are owned
Exactly, yeah. You've been reading our investor relations website. That's what we've been talking a lot about, right? Is ultimately how do we, as a company, prepare for the future where there's going to be more competition and distribution. There's a lot of companies. Greenlane's one of the largest distributors in cannabis. We're tiny compared to distributors in other industries, food and beverage, et cetera, alcohol. And we want to be a company that owns our own brands. And again, when that competition comes, we can actually say, hey, you're not competition, you're our partner. Let us get our products on your trucks. Help us get our products from X doors to 10X the doors we're in today, and we're positioning for that now. We're already getting some of our products into C stores, and again, C stores have sold tobacco products for a long time. They're now realizing that that consumer's dying, literally and figuratively, and the cannabis consumer, the millennial consumer, is more aligned to cannabis. That's a huge opportunity for C stores, and so you're going to see a lot of these companies start to come in. And again, as Greenlane, we want to be prepared to take advantage of that and not have it be a threat to our future.
Hi, it's been a pleasure to listen to you both. My name is Rochelle. I'm a native New Yorker. I have a retail license for CBD as well as distribution license. Can you give me some suggestions on fundraising? Because it is expensive, and I'm not sure how to fill the store with product and how to reach a manufacturer. And that's part of the reason I came here today, to hear you speak and to meet the other exhibitors.
So Rochelle's question is really a critical question for this industry, which is raising capital. And to what extent can an existing entrepreneur who has a legal business be able to afford both the product to stay, keep inventory, which costs money, and obviously the dynamics around also expanding your business into distribution, which is, let's face it, it's New York City. I mean, the distribution within New York City business is, as we know, for every other thing we consume in this city, is unbelievably enticing, profitable, and certainly complex. I'll just throw my 2 cents in. Nick has some thoughts on fundraising too, because he's got himself all the way up to the NASDAQ Stock Exchange. I'll first say that I think the key, look, it's a pretty cold winter in raising capital in cannabis right now. It's a cold winter for a couple reasons. One, because global markets are, if you haven't looked at the stock market, by the way, I wouldn't blame you if you've never turned on CNBC in your life. It means you're a much more interesting person than I am. You might be aware, though, that global equity markets are under a lot of trouble. The Federal Reserve is raising rates, et cetera, et cetera. I won't get into more economics, but any high-risk asset classes are having trouble raising money now. I don't care what you are. And we went through a period where a lot of money was raised in a lot of other asset classes. I think for cannabis businesses, not unlike EV or gaming or even, I'll leave crypto for another world, but businesses that are real businesses, showing profitability and having the ability to be able to forecast your business and talk about your business with certainty is going to make you that much more interesting in a difficult environment. There are investors out there. So who are the investors? Look, typically the early stage investors in the cannabis industry have been high net worth individuals and family offices, not big traditional institutional money. One of the reasons why the cannabis markets that trade on the New York Stock Exchange or on the NASDAQ or anywhere are so volatile is because there are no real institutional investors in cannabis, because many of them are restricted from investing in it. But I think there are opportunities with private equity firms. My firm, one of my few hats in cannabis is, I work inside of a cannabis hedge fund. We invest in startup businesses. But I can tell you that profitability and investing in someone who just says, I'm going to be somewhere in a couple of years is really tough to get behind right now. But that, unfortunately, raising capital within cannabis right now, when the cost of capital is higher because you don't have traditional banking around it, is something that unfortunately was starting to improve. And it will improve when some of the federal obstacles are overcome. But in a market environment where, frankly, all capital has become more expensive, and again, the Fed's going to raise 50 basis points this week. Everybody's revolving consumer loans are going higher, and belts are being tightened. But I wish I could have a more positive story, Rochelle. But a real business can find funding, and there are channels for it. Nick, talk about it.
No, look, you hit the nail on the head. I mean, you have to be a real business. You have to be profitable in this climate. And, I think ultimately you're going to be forced to move a little bit slower. The days of just, hey, I'm going to raise, hundreds of millions of dollars and build for growth, those days are over. But the pros and cons as a business owner is, of course, the con is you're not going to get the money to be able to accelerate your growth. But the pro is no one else is either, right? So take your time, execute, build a solid fundamental business, and more money will eventually come in. And when the federal thing happens, it'll open up again. So this is just temporary.
The one thing I'd say, Rochelle, and to other people that are out there, finding traditional investors, a lot of you are not attached to traditional investment communities. But if you have a business, you might be attached to strategic partners. Find someone where your business is interesting to them. Whether it's just outright interesting, maybe they're just entrepreneurs as well. But obviously, if you're running a business, you have suppliers, you have distributors, you have manufacturers of whatever you do, and they may recognize the value in your business. And maybe this is a great time. Look, it's a great time to buy something when the world is somewhat distressed. They say, you buy when there's blood in the streets, and it's a horrible term, so I'll just say that opportunities when no one is willing to buy are the opportunities to get a great deal, obviously. Ma'am, you had a question?
We all know that women, and especially people of color, have always had trouble getting investment. Do you see that getting better? Is it different in this industry, or?
The focus on social equity and minorities and equality and diversity and inclusion in cannabis, I'm just proud to say, is as good as any industry I've seen. I think we need more women on boards, and I do think there are a lot of cannabis companies that should be having a lot more women involved. There's a lot of focus on minorities, so I am encouraged by it relative to the experience I've had. Yes?
My question is this. From a social equity perspective, how do you see the people being there first being a part of the strategy, kind of like in that non-traditional way he just talked about with investors? How do you invest in the people who was there first so you can be a part of it? Thank you.
Yeah, so I know we got to wrap up, but great question, and I think it goes to what I was saying earlier in terms of we've got to. Tim and I were talking about it. You have to incentivize the operators today to come into the legal market. They have to be able to. They're making money today, and they're not taking much risk, right? So how do you incentivize them to come here? Well, if it's just going to be, a lot of red tape and hard to make money, they're not going to be interested. So I think you need to create a framework where they're incentivized to get legal, to get compliant, and they can thrive. And I think that's what it comes down to.
We have to wrap. This has been a great conversation. Congrats to CWCB. This is the kind of a forum that New York needs, and it's for the people. So it's wonderful to be here. And thank you all very much today.